Financing in the trucking industry is changing and is changing fast. In today's video, I'm going to break this video down into 6 parts. The first part I'm going to talk about is realistic interest rates for excellent credit, mediocre credit, and bad credit, what you are to expect when financing a truck. The second part of this video, I'm going to talk about realistic down payments. What can you buy a truck with? What can't you buy a truck with? And what are the finance companies looking for? The third thing we'll talk about is the duration of the lease agreement that you should be doing. So both on new and used. The fourth thing I'll talk about is the finance brokers, their commissions, where do they get you? Where do they hook you? What are their profit margins? And what is up with these balloon payments that they put in the end? You'll understand why by the end of this video. The fifth thing I'm going to talk about is buying a truck with bad credit. Can you do it, and how can you buy a truck with bad credit? And the last part of this video, I'm going to show you how I was able to save an owner-operator about $15,000 in interest through my 1-hour consultation. Yes, $15,000, so make sure you stay to the end of this video. So the first part of this video is, where are the interest rates? So if you're an owner-operator looking for financing today, if you have excellent credit, you are getting 8%, approximately 8 to 9% with really good credit. Now, if you have fair credit, probably above 600 and between 6 to 700, you are getting about 11.5 to 12% on trucks. Yes, 11.5 to 12%. And if you have bad credit, forget about it. The finance companies will not look at you. In order to get these rates, a lot is riding on your down payment. Realistic down payments, guys, there is no more 5%, 0%, 10%. You need to come up with a normal down payment. What is a normal down payment? Well, I highly recommend that you put as much as you can, but 15, 10, 15, or 20% realistic. Those are realistic down payments today for trucks, especially used trucks. A lot of the finance companies, they don't want to deal with used trucks. So if we were here back in 2021, okay, where interest rates were low, the exact same person with excellent credit used to be able to get 5.5 to 6%. The mediocre credit, today it's at 11%. He used to be able to finance his trucks for 8.5%. And the guy with bad credit, today approximately 18%, used to be able to get it done for about 15%. What in the world happened? Well, interest rates have started skyrocketing. Because of inflation, our interest rates are going up, and they're trying to curb the inflation. Yes, it's working, but we are all suffering from it. I myself used to finance trucks at 3.5%. Today, I am paying 6.25%. Yes, 6.25% from 3.5%. That's a huge jump. I do not recommend anybody buying a truck with 0% down or 5% down. Guys, if you are going out there and buying a truck, make sure you're at 15% down. If it's a brand new unit, make sure you're at 10 or 15% down, because those payments are astronomical. They are big, especially now with brand new units being at $230,000, $240,000. 10% down, that's $24,000. It is, you are getting yourself into an agreement with crazy payments, really big payments, and the duration is outrageous. I'm seeing lease agreements for 7, 8, and 9-year leases is what I see, or I'm seeing, and it is a wrong way to do the lease agreement. So next thing, the duration of the lease, new and used. Guys, if you're buying a brand new truck, you really should not be going over the 60-month period. Okay, 72 months is stretching it. I don't like 72 months. 60 months is where you need to be. You should come up with a bigger down payment, or also what you can do is put a small balloon payment in the back of $10,000 or $15,000. Don't even think about putting $50,000 buyout at the end of the lease. Make sure you get yourself a small balloon payment. It will decrease your payments a little bit. But duration of a new truck, no more than 60 months. Duration of a used truck, guys, I know the finance companies love to push out 60 months on a used truck, 48 months on a used truck. You want the smallest duration. Guys, try to understand that these finance brokers, this is their job, and they're there to make money. They are not interested in making $1,000 on the deal or $2,000 on the deal. They will stretch you to 48 months. They will stretch you to 60 months. Why? Because their commissions are higher. The longer your duration is, the more commission they make on the deal. And they're there to make money. All right, so they will stretch you, but don't allow them to do that. All right, so a little bit about how the finance brokers how they work, what their commissions are. So usually finance brokers make about 1.25%, 1.5%, 2%. I've seen some crooks out there that make 4, 5, 6%. They slap on the fees of their 5, 6%. They get a crazy check, and I'll show you what that amounts to in just a minute. But these finance brokers, there are some good people out there, and there's some horrible people out there. I mean, they'll tell you that your rate is one thing, but the actual fees are something completely different. I've seen guys with really good credit. I've seen guys with homeowners that are paying 18, 19% financing rates. And when I ask them, how in the world did you sign up to that? A very common answer that I get, I don't know what you're talking about. My broker told me it was only 8%, it was only 9%. But when you actually do the formula and you reverse calculate the fees, that the amount that was financed and the amount of payment that they have, those interest rates come out to 18%, 19%. And the owner operator is in shock that he paid so much money for this truck. So here's a couple of things that you need to look out for. Number one is a big fat balloon payment at the end. This is really common. I hate to see lease agreements like that because sometimes the truck is not worth, there's a $50,000 buyout after 60 months, the truck is not worth $50,000. The owner operator is left with zero zilch nada at the end of the 60 months. So I hate seeing the buyout of $50,000. You want to buy out, make a buyout of $10,000, $15,000, $20,000 at most, but I don't like to see buyouts of over 20%. Don't do 72 months, don't do 90 months, don't do 84 months. Those are too long. The longest you should be financing a brand new unit for is 60 months. If you don't have the cash up front, then you should not be doing the deal. Don't do a deal with 0% down over the course of 8 years or 9 years. That is a recipe for disaster. You cannot make these kind of payments on year number 6, 7, and 8 when your truck is going to be in the repair shops. You cannot afford $4,500 or $5,000 payments, okay? Don't lose your house over this. I've seen people lose their houses. I've seen people lose their wives over these decisions that they make and these really bad lease agreements. And the finance broker, trust me, he doesn't care because in 3, 4, 5 years, he gets his commission up front from the banks, okay? Now, I'll go a little bit more in detail on that. Part number 5 of this video, we're gonna talk about buying with bad credit. Guys, buying with bad credit is a really bad decision to do. Why? Because automatically you're gonna get 22%, you're gonna get 18%, 19%, 20%. It's not a good idea because the fees for your financing fees, I know that it might seem like it's not a lot, but it really is when you're financing a $50,000 truck over the course of 48 months and you're paying $2,000 for it. That's insane. Okay, those fees are really high. I do not recommend anybody with bad credit to finance a truck. I do recommend though, if you have bad credit and you really want to become an owner operator, find yourself a company that has a good lease purchase program. Do not, okay, unless you have a really big down payment, okay? The only exception to the rule is if you have a big down payment. And a big down payment, I mean 30%, okay? So if you're buying a $100,000 truck, you have 30% down, $30,000 down, you're gonna finance $70,000. Yes, you will find, even with bad credit, you will find a finance company with decent rates. All right, so let me show you the realistic interest rates from back then and today with the actual payments of these trucks. So if I go here and I type on Google commercial equipment financing, I will go into the finance calculator for ET Transport. I created this link just for you guys out there, okay, to play around with it, to double check your brokers. This is one of the most important things. You gotta double check the rates that you're getting. You bought a truck for $220,000, you put $40,000 as a down payment, and now you're financing $180,000. Now I want you to see the difference between today's interest rates when you have excellent credit. Okay, when you have excellent credit, you are probably most likely paying, so when you have excellent credit, you're paying 8% today's rates, okay? And if you're doing this over 60 months, all right, your monthly payment is $3,649, okay? $3,649. Now, this is with zero buyback at the end, 60 monthly payments at 8%. Now, what I see, all right, a lot of the times what I see is I see people financing trucks at 12%. Now, if you change this to 12%, your monthly payment is $4,000. Okay, that's a huge difference between 8%, between $3,649. It's $350 every single month for the course of 60 months, okay? So here you have the total interest paid. So you have $38,985 is what you paid in interest. Now, if you were to finance this truck at 12%, you paid $60,000 in interest. That's a lot of money to be paying in interest. This is money that just goes to the banks, to their profit margins, and to their bottom line at the end of the year. Now, what does a broker make from this deal? Well, the higher this number is, so for example, if it's 8%, right, the banks gave him an interest rate of 7% to this broker. The broker tackled on another 1%, and that's what he made on the deal. So what is 1% of the deal? If you look at 1%, it's $4,612, which is right here. Okay, but what if a broker tackled on 3 or 4%, which is extremely common in our industry, and that's why I always say to double check your brokers and use multiple lenders to be able to get the best bang for your buck. Don't go with the recommended finance company of the dealership. That's the biggest mistake that you can make. So if a broker tackled on 3%, look at this amount over here. That broker received $14,000. Now, what if he tackled on 5% on the deal? And I can assure you, I've seen brokers do this, all right? Now, if a broker tackled on 5%, let's say he got 6% from the bank and gave you 11%. If that broker tackled on 5% on this deal, he got $23,000 as commission on your deal. That's why the most profitable room in a dealership is not buying and selling the trucks, it's the finance company within that dealership, okay? And that's why they always push their finance company. Now you're gonna see why they push you to a much longer duration. Somebody came to me and wanted to finance a truck, and my commission is 2%. Let's say I put a 2 commission spread, okay? I made $9,200 if you finance that truck over 60 months. But what if you finance that truck over 6 years, which is 72 months? Now my commission is $11,165. But what if I pushed you to 8 years, right? So 8 times 12 is 96 months. Well, if I pushed you to 96 months, okay, then my commission for this deal at 2% would be $14,933. Obviously, I as a broker am more interested in you financing your truck for much longer, okay? So let's take an example of a used truck. Let's say a used truck is $60,000, right? Sorry, no, let's take a used truck. A used truck is $100,000, right? Now you put $10,000 down and you're financing $90,000 of it, okay? Now, if my spread on that truck is 3%, and I told you what I recommend to do is $90,000. So $2,617 is palatable, okay? Now, over the course of 3 years, you're done, that truck is yours. But I only made 3% on this deal. Now, I don't want to go home with $4,200. I want to make more money. So what do? I stretch it out to 48 months. And I convince you that it's better to pay $2,000 versus $2,700. It is logical. But look what I did to the broker's commission. I just made it $5,620. Now, the broker's like, you know what? I want to make more on this deal. So what does he do? He'll tackle on 3.5% and he'll increase it to 60 months. Now I just made $8,200 on the deal, right? So these brokers have a lot of room to play with. So if you think that, $1,600, if a broker told me to pay $1,637 over the course of 5 years, I mean, $1,637 sounds really good, and it sounds much better than $2,000. But you're actually paying a lot more for that truck because you're paying a total of 9% interest with the broker's commission, but now you just paid $90,000 for the truck and $22,000 in interest paid. But what if I was able to get out of you 11.5%? Look at what happens to the interest. Right now I paid $28,000 in interest. That's a lot of money to pay in interest on a $90,000 deal. All right, now the last thing I want to show you is buying a truck with really bad credit, what this does to your payment. So usually when drivers want to buy a truck with really bad credit or bad credit, right? The broker knows that not a lot of finance companies are going to finance your truck. So a $100,000 truck, you're gonna put $30,000, let's say you have $30,000. Now you're gonna take $70,000 and the interest rate is gonna be about 19% over the course of I mean, he's not going to do it for 24 months or 48 months. But let's check how much it is on 48 months. Look at the amount of interest somebody paid on a $70,000 deal at 19%. Now, the broker will definitely tackle on on somebody with bad credit at least 3 or 4%. Now, 4% is only $5,800. He's not doing this deal for $5,800, so he's gonna stretch out the duration for 60 months, leaving him with $7,500. But you are gonna be paying over the course of the next 5 years, you're gonna be paying 18% interest, which is a total of $36,665, okay? So guys, I will link up this calculator below, and I want you guys all to play with it. I want you to see what kind of payments you're gonna get for $70,000 financing, $80,000. For those of you that are looking to buy a truck, guys, again, I can't stress enough, do not go with the recommended finance company of the dealership. They are going to hook you in for these outrageous fees. And a lot of the times when you ask them, what's my interest rate? They will give you the bank's interest rate, not the interest rate that you're getting. So for example, the bank will give them 5% or the bank will give them 7%. They will tackle another 2 or 3% on the deal, and they will tell you that your interest rate is 6% or 7%. They won't tell you the amount that they're tackling up on top. So I was able to save somebody $15,000 in my 1-hour consultation. How in the world did I do that? Very simple. So the owner operator that I had a consultation with had a deposit for a truck. It was a brand new Freightliner Cascadia. Purchase price on his bill of sale was $245,000. That was with the extended warranty, yada yada. Driver put 10% down, which is $24,500. Driver was supposed to finance, okay, the amount that he was financing was $22,500. Now, the interest rate that he got was 9.8% over the course of 84 months, okay? So the owner operator was about to sign this lease agreement here, $22,500 with 9.8% interest rate at 84 months. The driver was about to pay $3,712 and paying a total interest rate of $86,812. So I told him, hold off, give me the deal within 48 hours. I sent an email to a recommended somebody that I know, and I was able to get the driver not that big of a difference in rate, but look what it did to the final price. So instead of 9.8%, I was able to get him 8.2%. Now, if you think about it, it doesn't make that big of a difference, but I want you to see the amount of interest paid over the 84 months, okay? So I was able to get him 8.2% over the course of 84 months. Total interest paid was $71,500, which is approximately $15,000 that I saved this owner operator through a 1-hour consultation with me. I went over all of his documents. I was able to forward it to a recommended finance company that I know and that I work with, and I was able to save him $15,000 through my consultation. So the difference between the monthly payments were $3,712 versus $3,529. It's $183, okay, which might not seem a lot to you. Wow, what's $183 a month? But when you multiply that over the course of 84 months, I was able to save him $15,372. Okay, it's these little things here that are gonna make a world of a difference after the course of 84 months. Okay, so was I able to help out the owner operator? Absolutely. I mean, if you think about it, I actually saved them $15,372. Now, if you have any questions about financing, put the comments down below. I read most of the comments, and I'd love to help you guys out in your next purchase or your next deal, especially when it comes to trucking. This channel is all about trucking, and a big part of our industry is commercial financing. Okay, hopefully you learned something from this video. I'm Ronen, R-O-N-E-N, and I'll catch you in my next video.